China's customs authorities say China has been at the forefront of economic development and pandemic response globally, with foreign trade hitting a new high in 2021. Official data shows it was up $1.4 trillion from the year before and exceeded $6 trillion for the first time. China posted steady growth with its 5 largest trading partners, that's ASEAN, the European Union, the United States, Japan, and South Korea, with the highest growth rate exceeding 20%. Meanwhile, the country's trade with economies involved in the Belt and Road Initiative reported a higher than average increase of over 23%. China also posted a record trade surplus last year as exports continue to outperform expectations during the global pandemic. At about $676 billion in 2021, it was the highest since records began in 1950. It was $524 billion in 2020. Joining us now is David Blair in Beijing. He's the Vice President of the Center for China and Globalization. Mr. Blair, it's good to have you with us. So we'd like to get your thoughts on this trade deal. Has it done what it set out to achieve over the last 2 years?
Well, I think we've seen that the Phase 1 trade agreement worked. Chinese purchases from the United States have gone up just as promised in the deal. And as you've seen, Chinese exports to the United States have been very, very large over the last year. Theoretically, global trade agreements, rules-based trade agreements should be better. But in many cases, a trade agreement like the Phase 1 trade agreement may be the best we can do. It's simple, it's transparent, it improves relations between bilateral countries. So I think it's a pretty good way to go in the future. I hope that we can continue that kind of policy. Over the last year, we've seen that U.S. purchases from China have gone up a lot, but I think that's artificial. That's largely driven by very strong fiscal and monetary stimulus from the United States, which cannot continue. This stimulus is creating inflation in the United States. I think it's highly likely to lead to some kind of financial crisis in the next few years. So that kind of stimulus won't continue. I think China's a very big economy now. 15 years ago, it was still a small economy, so it could be driven by external sales, the exports, demand from elsewhere. But going forward, China needs to be driven by internal demand from its own consumers. And the way to create internal demand is to see the wages of average people continue to go up. They've been growing up very rapidly over the last 20 years. If that continues, it bodes very well for the future of the Chinese economy. And I think there are 3 current policies that focus on that. The first is dual circulation, the idea that you have to increase domestic demand while at the same time dealing with the outside world. The second is upgrading of the economy, upgrading of manufacturing. That raises wages in and of itself. The third is common prosperity, to be sure that the increased growth does not get taken by a few people, that it's spread throughout the country. I think all three of those things are very important going forward for the Chinese economy, and they're more important than, and they're more of a driver than external sales could possibly be.
So this trade deal, it's done good for obviously bilateral trade, but it hasn't brought an end to the friction. So we have actually seen other sanctions and protectionist measures, as well as delisting actions against Chinese companies from the U.S. The U.S. is accusing China of even not properly implementing the deal. So do you think this will get in the way of trade ties in the future?
Absolutely. I mean, this is driven by an ideology, a belief that by many people in this administration that China is a long-term competitor, perhaps and that relations can improve, but they can't really get great. So I imagine these sort of restrictions on high-tech exports and even medium-tech exports to China from U.S. companies is very likely to continue. This causes problems for China in the short term, but I think it will backfire in the long term because Chinese companies will be forced to develop their own indigenous technology and chips. They've already done so in 5G. So I think this is a counterproductive policy, but I do think it's likely to continue.
And you're no doubt familiar with President Xi and his messages of globalization, multilateralism. Your thoughts on that, Mr. Blair?
I think that's a very good thing going forward. One thing is that if countries work together, if countries trade together, it leads to a more peaceful and cooperative world. That's the chief benefit. For smaller countries, access to the Chinese market is really crucial because China is the fastest growing major consumer market in the world. And so this is a big benefit to many of China's trading partners, is having access, especially the smaller countries. I mean, everybody but the United States is a smaller country. And that's likely to be beneficial to many countries.
Well, thank you so much. We really appreciate your time and insights. This is David Blair, Vice President of the Center for China and Globalization. Thank you.